Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within corporate filings. And sometimes those secrets are about whether a company is actually going towards the future or doing a bit of a reverse. Today we are diving into Actelis Networks, Incorporated's latest report. This isn't just a pile of corporate jargon. It's a peek behind the curtain at what happened at their last shareholder meeting and what it means for the company's path forward. Stick around to find out what votes were cast and what could be coming down the pike for Actelis Networks. If you're into decoding these financial secrets, make sure you hit that subscribe button. And you know we have a fantastic community over on Discord, linked in the description below, where we break down these reports even further. Scroll Actelis Networks Inc. exact name of registrant as specified in its charter. Scroll So, we're looking at a Form 8, which is basically a report for significant events that happen between their regular financial filings. The main event here is their special meeting of stockholders held back on the 7th of November 2025. They had about 14.7 million shares of common stock out there, and each share gets one vote. Out of those shares, around 5.4 million were represented at the meeting. This means just under 37% of the possible votes were actually cast. That is enough to get things done, but it makes you wonder where the other 63% were. Now, onto the proposals that were put to a vote. The first one was about authorizing the company to issue warrants. Warrants are like options giving someone the right to buy shares later, usually at a set price. This proposal was to authorize issuing these warrants for a deal related to what they call a warrant inducement transaction. It sounds a bit technical, but essentially they're getting approval to create more potential for shares to be issued down the line. Scroll 1356971152598, 1650339287503 scroll. Looking at the results here, Proposal 1 got a good chunk of support with about 1.3 million votes for it against about 152,000 votes against. There were also over 16,000 abstentions and over 3.9 million broken non-votes. Broken non-votes happen when a brokerage firm holding shares for clients doesn't receive instructions on how to vote, so they can't vote those shares on that particular item. Next up, Proposal 2. This one was also about authorizing the company to issue warrants, similar to Proposal 1, but this time for securities issued in an offering that happened back in June of 2025, so they are seeking approval for warrants related to a past offering. Scroll 1354486158015,006392875 scroll. The voting here is pretty close to Proposal 1, about 1.3 million votes for with around 156,000 against. Again, we see a similar number of abstentions and those broken non-votes, which suggests that many institutional holders might not have provided specific voting instructions for these proposals. Now, this next one is a big one, Proposal 3. This was to approve an amendment to their company charter to do a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares, which in turn increases the price per S-share. They were looking at ratios anywhere from 1 for -7 to 1 for -12. The exact ratio would be decided by the company's board of directors. Scroll 4930672334,395, 189,755,3928750 finds. Scroll, this proposal got a much stronger showing of support. Nearly 4.9 million votes were cast in favour, compared to about 334,000 against. There were also over 189,000 abstentions. The higher number of for votes here suggests that many shareholders understand or are in favour of a reverse split, possibly to boost the stock price and meet exchange listing requirements or to appear more attractive to investors. Because Proposals 1, 2 and 3 all passed, including the significant reverse stock split approval, they withdrew Proposal 4. This proposal was essentially a backup plan to postpone the meeting if they didn't get enough votes for the main items. Since they did get the votes, they didn't need to adjourn. Scrolby, Senjova from name, Yova from title, Deputy Chief Executive Officer, and Chief Financial Officer scroll. And to wrap it all up, the report is signed by Yoav Efron, who holds the titles of Deputy Chief Executive Officer and Chief Financial Officer. This indicates the official sign-off from management after these important shareholder decisions. So, what does this all mean for Actelis Networks Incorporated? Well, it seems the company is actively taking steps to reshape its financial structure and potentially improve its stock performance. The approval of the reverse stock split is a significant move. Companies often do this when their stock price has fallen too low, making it less attractive or even risking delisting from major exchanges like the Nasdaq. By reducing the number of shares, they can artificially inflate the price per share, which might make them look more stable and appealing to a broader range of investors. The approval of warrants for both the inducement transaction and the past offering suggests the company is looking at ways to raise capital or incentivize certain parties through equity, like instruments. However, issuing more warrants can also dilute the value of existing shares if those warrants are eventually exercised and new shares are created. Investors will want to keep a close eye on how these warrants are used and what impact they have on the overall share count and earnings per S-share. The fact that a good portion of the votes in favor of Proposal 3, the reverse stock split, came from shareholders voting directly or by proxy rather than broken non-votes indicates a level of shareholder confidence or acceptance for this particular strategy. It suggests that at least a significant segment of their ownership believes this is a necessary step. Now, for the risks. A reverse stock split doesn't inherently fix the underlying business issues that might have caused the stock price to fall in the first place. If the company's core operations aren't performing well, the higher stock price might not last. Investors might see it as a band-aid rather than a cure. Also, the issuance of warrants, while potentially useful for fundraising, carries the risk of significant dilution for existing shareholders if not managed carefully. Looking ahead, the company's success will hinge on its ability to execute its business strategy effectively following these financial maneuvers. Will the increased stock price attract new investment? Will the warrant strategy be a fruitful way to secure necessary funding or partnerships? These are the questions investors should be asking. In conclusion, Actelis Networks Incorporated is navigating a period of strategic financial adjustments. The shareholder approvals pave the way for a reverse stock split and further equity mechanisms, signaling a clear intent from management to influence their stock's market perception and financial standing. The real test will be whether these moves translate into sustainable business growth and improved financial health. Alright, that is our breakdown of Actelis Network's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the reverse stock split is a good move or a sign of deeper trouble? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. And don't forget to check out the Discord link in the description for more exclusive content and discussions. Thanks for watching. See you next time.